Hello and good afternoon, YouTube. Thank you for joining us. It is Tuesday, the 7th of June. And as we always say on a Tuesday, this is really where the week gets into its groove. Thanks for coming on and having a look at our channel. Please, if you haven't already done so, like, comment, share, and subscribe. That way you'll be able to pick up when we go live in future, get the notifications as they happen. So let's have a quick chat about what we saw early on in Europe. So yeah, let's start with the Euro stocks. Really choppy start to the day on the Euro stocks. We had the open here at 8 o'clock with the volume kicked in, and we were kind of trading from value high to value low. We really didn't get it. Well, we didn't have anything to take us out of that range until just after 10 o'clock. Since then, we've seen a little bit of a trend to the downside, and there's a couple of reasons for that. Just around midday, we had some news out, which we'll come on to, which has put the futures on the back foot in the US, and it might be worth paying close attention to that today as we move forward. The FTSE even more so. I mean, if you look at this opening candle on the FTSE here, we traded in this range. It was about 30 ticks on the opening first 5 minutes, and we didn't actually break above or below that level until just after midday. So that kind of shows quite how choppy a morning this was for those of you trading the indices. Not as easy as it has been on many occasions yet this year. Going on to the news for the day. So Target, this obviously is one of the US retailers, and they have issued some warnings. They are planning price actions. So this is the likelihood is they're going to be increasing the costs of goods and the average price that they sell their products at. This is to cover their high transportation costs, because as we all know, the costs of fuel have gone up markedly over the last 2-3 months, and that's put a real squeeze on their margins. And this is how they're going to cope with that in order to keep their profitability. They're also looking to wind down inventory and cancel future orders. So this has a number of effects. So if you have cancelled orders in kind of the supply chain, then all of those manufacturers are obviously going to sell less product to Target than they were expecting to. Similarly, if they're winding down their inventory, that's really where they're going to get those kind of supplies from. And this has a kind of a big impact on inflation as well, because if the prices of normal goods start to rise in these kind of leading supermarkets, then it's the consumer that's going to pay for that. And that's where we're going to potentially see this feed in. Not just, I mean, we've got inflation figures out on Friday this week, and usually I think because of the Memorial Day on Monday. We have inflation figures out this week, but this won't be reflected in those figures later on in the year. The impact from what we're seeing in these price hikes from Target will be felt, I'm sure, across the US. But it's not just Target we need to take a look at. Walmart is another one that's we've got a slightly bigger market cap, and that is quite a large component. This is a really good resource, which I've obviously shared with you guys before. If you look at the S&P, Target Corporation is a mere 0.14% of the S&P, so it's not likely to move the S&P with much gusto, albeit you can see that it's already off 9% in the futures, whereas Walmart is a very similar business, and markets do this. They obviously take the information that you're getting from one company, and then they would extrapolate that to the whole industry. And Walmart is obviously one of the big players in the US, and this actually makes up quite a large proportion of the Dow, just over 2.5% of the Dow Jones. And this itself is off 4%, probably a little bit more than that if I refresh this. Where are we on Walmart? Got some of the gains, those losses back, but it's down, 2.66% on the day. And these are potentially going to have big impacts on the US markets today. We've been looking for a narrative. It hasn't really been there in today's session. All of the news really has kind of come, well, the focus for us in the UK has been very much on what's happening with Boris and his no confidence vote. And let's have a little look at that, because obviously those of you who aren't in the UK may not be aware of this, but we had a no confidence vote in our leader from his own party yesterday, and there were only 211 voted in favour of him staying. 148 members voted for him to leave. And if you discount the number of ministers within his own government from that, then that means that about 75% of the non-ministers in his party wanted him to leave. So this is obviously having a little bit of a shakedown or was initially having a shakedown in cable. The cable market is still off 0.27% on the day. But this was released at 9 o'clock last night, and we had a nice little drift down in the early futures. The cash market, when it came in on the FX, has obviously drilled it a little bit higher, and we're in a little bit of a range here, but I'm obviously looking for potential breakdowns on this, or if I can manage to nick a short a little bit higher, I may take it, because the view is that as much as he passed this vote of no confidence, he passed by a smaller majority than his predecessors. So Theresa May had a vote of no confidence. She had less people voting against it than this. Same for John Major, and the same as far back as Margaret Thatcher. None of those three prime ministers survived 3 more years in power. So the view is that given that Boris has performed to a poorer, received more no confidence votes from his own party than any of his predecessors, the question is, will he even last this year, or certainly the next 12 months? So as much as Cable may be recovering today because he has indeed managed to stay in post for now, it may be a case that he's won the battle, but he may be in the process of losing the war. And yeah, so keeping an eye on what's happening with Cable will be interesting. If I can get a break lower, I might take that on. We'll be on momentum. If we can push back towards these kind of value highs, then I will potentially look at that as well. Other news in the UK today, we had PMI data out. PMI was a little bit better than forecast. So we're expecting 51.8, came in at 53.4. This is always a little good resource to have a look at. So 53.4 is the best that we've had, the worst that we've had since March of 2021. The PMIs are starting to dwindle, as you see here. Back even as early as April, we were looking a lot higher than where we are now at 62.6. So we are, and obviously below 50 is with PMIs is deemed as a contraction. That's why this is kind of the line in the sand with positives and negatives for those of you who are new to PMI data. So that was really, there's not a huge amount out in terms of data today. The PMI was mainly the big one today, and it isn't really the narrative of the sterling trade at the moment. Obviously, it's all the politics that seems to be driving it. And this afternoon, similar, there's not a huge amount out. Big one I would pay attention to is the Treasury Secretary, Janet Yellen, is speaking. She is speaking to the Budget Committee. Bear with me, there's a little ping on my orders there. Yeah, due to testify on the fiscal year 2023 budget before the Senate Finance Committee. So they're going to ask us some questions. For those of you who were following our group last week, you'll be aware that Powell, the Fed chair, met with Biden, and Janet Yellen was there as well. And she obviously used to be the chair of the Federal Reserve herself, so she'll know a thing or two about monetary policy, as well as the fiscal policy that she's now in control of. Now it'll be interesting to hear what she says, because she may have some takeaways from that meeting. And given that we have the FOMC meeting next week, well, as you all know, we don't hear from Fed Reserve members in the week leading up to that vote. They have what's called a blackout. And at the moment, you're not going to hear from the likes of Powell, Bullard, Brainard until after we've had that rate decision next Wednesday night. So Yellen might be the one who can give us a little tell as to where things are going. And she's already been on the wires literally 5 minutes before I came on with you, saying that the US does face challenges, including, and the quote is, unacceptable levels of inflation. Now, if anyone's going to know what the US inflation is going to be this Friday, I would say she may be that person. So perhaps the numbers that are expecting month on month at 0.7, even though it's a big jump from the 0.3 that we had previously, maybe north of 0.7 might be in the post. So do pay attention to that. This will be, inflation data, as we've seen throughout the last few months, has been a really, really good way to trade. High inflation has led to very easy short in indices, as higher interest rates are not received too well by growth markets. So that's something to bear in mind as we go through, but not a huge raft of data to get your teeth into today. Got a bit more later in the week, obviously with the ECB. We won't be back on YouTube until after that. Be aware that the ECB are making their rate decisions. Nothing expected yet. As I say, the main financing rate is due to stay at 0. But there is talk that we might get a full 50 basis point hike at the following meeting. So listening to the press conference at 1:30 may be where the money is made in that. So we're approaching the open. 10-year yield is just pinged for me, so I'll have a look at that for you for a second. As we approach the open with 23 seconds to go, we can probably do that right now. The 10-year yield has given up a little bit of those gains. So we broke through that 3% level yesterday, and we've gone just back in the pre-open just to retest that level. So This is levels we've not seen since May 18th. So we are kind of, if you look at the daily chart here, we are kind of nudging a little bit higher again. That's what 6 consecutive days of upside on the yield. Obviously, this is the 3.2 as the high for many a moon is what we'll be looking for going forward. But that yield tends to reflect weakness and uncertainty in the market as we approach the open. So with Target, I've got Target here on the right-hand side. So this is obviously the pre-market trade from midday through to the open at 2:30, which is why it's kind of grayed out here. But you can see the gap that we've had down. Decent sell-offs in Target. And let's have a look at what impact that may have on the indices. It may well be that Target and Walmart have an impact on these markets today. So do be aware if they do start to run away to the downside, it may be a little drag on those long positions. I know Steve on the group has highlighted a potential long trade on Dow as things stand. So pay attention to his trading if you want to jump on that. So early trade, we're up a little bit on the S&Ps, not a great deal, kind of flat, well, just off to the downside now on the NASDAQ. Not a huge amount of volatility early on. So I'll be curious to watch what happens here with Target, see if we do start to break down these lows at 144s. If they go today, I'll be putting a little alert on here in case I'm looking elsewhere to see if that can perhaps trigger a little cascade to the downside, if indeed that is what we're going to see. In terms of your plan for the day, I would certainly probably keep your powders dry until we either get that break, or certainly the way I'm going to do it is wait till we get that break. If we do to the downside, and moreover, wait for Janet Yellen to have her say to the Senate Banking Committee, because I think there might be some takeaways from that are digested by the market, either bullish or bearish. But it'd be very good to hear her take on this, because this is the last kind of big speaker we get in the US before we approach the FOMC meeting next Wednesday. For those of you who don't follow us on Zoom, we do a long, protracted, but very insightful hour and a half Zoom throughout the FOMC rate decision and through the press conference, giving you our views as they happen and letting you know what trades we're looking at. So, if you haven't already subscribed to our Zoom, then you can do that in the comments below. I've put the link so you can sign up to that. And then you'll get our Zooms that we do every morning at 7:50, and all of the Zooms that we do at 2:20, Monday, Wednesday, Friday, Tuesday, and Thursday, we give to you for free on the YouTubes. So NASDAQ is the one weighing heavily so far. Often the FANGs have led the way with these stock markets in recent years, so that might be worth paying attention to. The Dow being the stronger of the three of the indices, and it's having a nice little pop here. In the range, the kind of magnitude of these ranges, we're up 75 ticks on the upside there, and that's created a little bit of a tail to the downside in the NAS. So Steve's long Dow on the open maybe was the way to play it indeed. And we will have a look. Was there one more market? The dollar yen was the other market I wanted to talk to you about as well. We've had big breakout. We're at 20-year highs on the dollar yen. So we kind of had a huge break yesterday through this 131 level, 131.40. We went the whole way up to 133, hit that round number, and we've just been consolidating since. We haven't seen huge selling in this yet. We're just trying to trade it off those value highs down, tag these value lows here. So we're very much in a little range on the dollar yen. I am looking to see if we can get a break higher. A lot of the reports I'm saying can fairly value this at 135, given the we've got a little link on the FTSE. A lot of the comments are saying that the interest differential between low rates and stimulus in Japan and higher rates and quantitative tightening in the US mean that you may well see a continued weakness of this dollar yen. So that's one, if you can kind of snare it along in that. There weren't too many bad places to be long in this market the last kind of 2-3 days. Any buy has been rewarded pretty quickly on the whole. So do be aware that there's probably some sort of correction in this, but if we can start to get momentum to the upside again, it can move very, very quickly, as we've seen a lot this year. If you kind of rewind back a few months, clean this up a tiny bit for you before we go. This move that we had in March saw a huge, we're at 114s now up to 133s. That sort of volatility in G4 currencies is pretty much unheard of. So we are in unusual territory with the yen at the minute. So that should hopefully give you a little bit of something to look at in the currency market if it's not something you paid close attention to before. So back to these indices as we approach the close of the first 5 minutes, and they're all green as we look at them. So target itself as well is getting some bids on the open, so not being hit too hard to the downside just yet. And yeah, pretty strong start to the day for the US market. So good luck with your trading today. As I say, please subscribe if you haven't already done so, and we will be back on YouTube on Thursday at 2:20. And for those of you on the Zooms, we'll see you in the morning.